Stablecoin Terra USD or USD crashed on May 10 and is down at 54% at 44 US cents on the morning of May 11, prompting regulators to renew calls for cryptocurrency legislation. Do Kwon, co-inventor of the failed Terra stablecoin system, whose collapse wreaked havoc in the global cryptocurrency market, said authorities in South Korea haven't filed charges against him or been in touch. South Korea haven't filed an interview with crypto media startup Coinage. The co-founder of Terraform Labs was asked if he plans on returning to Korea from Singapore, where he has been staying. It's kind of hard to make that decision because we've never been in touch with the investigators. They've never charged us with anything, Kwon said in the video interview. His first since Terra and its related token Luna crashed in May, causing some $40 billion in losses for investors around the world. Before we get into the full interview and details about what the Terra stablecoin actually is, we would like to remind you that we have an interesting bonus fact for you towards the end of the video. With that out of the way, let's get into it. Number 1. Allegations. South Korean prosecutors last month raided the home of Terraform Labs co-founder Daniel Shin as part of a probe into allegations of illegal activity behind Terra's collapse. Authorities have also required that Kwon notify them when he returns to the country and banned current and former employees of Terraform from leaving the country, but no arrests have been made. Kwon said he plans to cooperate when the time comes. When the interview host floated the prospect of jail time, Kwon said, "Life is long." South Korean prosecutors, asked about the Coinage interview, declined to disclose details about the investigation, saying in a text message that they're doing their best and taking all necessary measures. Terra's collapse and the broader market sell-off led to the implosion of Three Arrows Capital, the once high-flying crypto hedge fund now under liquidation, with market contagion also affecting lenders and brokers such as Voyager Digital Limited and Celsius Network Limited. Number 2. Not a Ponzi scheme. I've never thought about what could happen to me if this fails, the Terraform Labs TFL CEO said in an interview on the NFTV series Coinage with host Zach Guzman, which aired on Monday. Kwon said his confidence at the time was justified as the market success of his Terra ecosystem was inching close to $100 billion or 98 billion pounds. He admitted in the interview his faith now seems super irrational. He said that Terra was not a Ponzi scheme because the earliest investors were among the hardest hit by the crash. Kwon said he could not quantify his losses but described being down infinite. Kwon also contended with the possibility of a mole at Terra. If you're asking me whether there was a mole at TFL, that's probably yes. Whether somebody tried to take advantage of that particular opportunity, I would say that the answer is yes, he said. But if those opportunities existed, then the blame is on the person that presented those vulnerabilities in the first place. I and I alone am responsible for any weaknesses that could have been presented for a short seller to start to make a profit. Kwon moved to Singapore prior to the Terra crash and said he did so out of fear for the safety of his wife and child. So what we're going to do is we're just going to put out the facts as we know them. We're going to be totally honest and deal with whatever consequences as they may be, he told Coinage. Number 3. Stablecoin Terra USD. Stablecoins are cryptocurrencies whose aim is to remain stable and have low volatility. They can be pegged to a currency or a commodity, such as gold. Terra, a so-called algorithmic stablecoin, is pegged to the US dollar and can be used in conjunction with Luna, Terra's non-stablecoin cryptocurrency, or as a standalone token, according to CoinMarketCap. It's also the 18th largest cryptocurrency by market cap. Stablecoins are only valuable to users if they maintain their price peg. The Terra protocol uses the basic market forces of supply and demand to maintain the price of Terra. When the demand for Terra is high and the supply is limited, the price of Terra increases. When the demand for Terra is low and the supply is too large, the price of Terra decreases. The protocol ensures the supply and demand of Terra is always balanced, leading to a stable price, according to the Terra website. The The Wall Street Journal explained that Terra USD is structured differently from other major stablecoins as it relies on financial engineering rather than hard assets such as cash to maintain its peg to the dollar. In turn, critics say that makes it riskier because traders might not always respond as expected to its built-in incentives. Number 4. How it happened. The idea of an algorithmic stablecoin is instead of having a banking reserve, you have a sort of messy, lower quality banking reserve. It's a way to claim that you're building a stable thing out of unstable things, said David Gerard, the author of the book Attack of the 50-Foot Blockchain. Luna was supposedly a governance token, which is a way to pretend that made-up Ponzi money is not made-up Ponzi money, he told Euronews Next. Things were made even more complicated after Terra's creator Do Kwon purchased $3.5 billion worth of Bitcoin to support UST in the event of a crisis. Kwon's Luna Foundation Guard then said in a tweet it had withdrawn 37,000 bitcoins worth more than $1 billion at current prices to lend out. The company said very little of the borrowed bitcoins have been spent, but it is currently being used to buy UST. Many worry that the Luna Foundation Guard will sell a large part of its bitcoin to support UST. I think the compelling aspect of this story is that they had a small 2008 financial crisis themselves. In the 2000s, when money was great, people had so much money. They couldn't even invest it fast enough. They said, what's safer than real estate? Real estate doesn't go down. So let's bet on mortgages and loans based on mortgages. And so you had equivalents backed by a derivative of the price of that house, he added. House prices, of course, did come down, and then all these safe dollar equivalents collapsed with them, and then everyone depending on those collapsed. Gerard said this is much the same as what happened with Terra. It was based on nonsense and had Bitcoin effectively at the bottom, and they actually crashed the price of Bitcoin, and that crashed all the other cryptos because they're all correlated, he said. So they did a small 2008 change of leverage, over-leveraged, collapsed, and took the real asset with them. Number 5. More regulation needed. The Terra saga has not just knocked the price of Bitcoin and Ether, but also the world's largest stablecoin, Tether, which sank as low as 0.98 on Thursday and again is meant to have a $1 peg. There are also concerns about if Tether also has enough assets to support its intended $1 peg. The company had said all its tokens were backed by dollars held in a reserve. But after a settlement with the New York Attorney General last year, it was revealed that Tether relied on a range of assets including commercial paper, a form of unsecured debt, to back its token. With much doubt over how stablecoins are backed, it is likely regulation will come fast. U.S. Treasury Secretary Janet Yellen pointed out the Terra USD as evidence of the potential threat to financial stability from unregulated cryptocurrency markets during a Senate Banking Committee hearing on Tuesday. A stablecoin known as Terra USD experienced a run and declined in value, Yellen said. I think that simply illustrates that this is a rapidly growing product and that there are risks to financial stability, and we need a framework that's appropriate. Thank you for staying tuned. It's now time for the bonus fact. One investor who may be regretting putting his faith in Terra USD is Changpeng Zhao, the CEO of Binance, the world's biggest crypto exchange. Binance bought $3 million worth of Luna in 2018, which at Luna's peak had a value of $1.6 billion. It's now worth less than $3,000. What are your views on the stablecoin crash? Comment down below and let us know what you think. If you enjoyed the content, uplift the channel by hitting like, subscribe, and ring the YouTube bell to meet us again in the next video. Until next time.